Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in investment real estate, primarily in the Tulsa and the Oklahoma City metro markets. All right, it's September when I'm doing this video, and normally this is a very, very soft time for anybody buying a home, either to live in themselves or to invest in. Why? Mainly because the spring and summer months are really the months that everybody gets going. School starts the middle of August, and so if you've got kids and you want to move somewhere, you're already have moved. So normally we have the doldrums in September and October, but that is not what is going on right now. What's happened is that even before the Fed meets in September, and they've already indicated that a cut is coming, at least 25 basis points, maybe 50, the market has moved the rates down. The market is anticipating these numbers. They're looking at the data. They're looking what Jerome Powell has said. And they said, okay, let's go ahead and lower rates ourselves. We're not going to wait for the Fed. And so, and I did this in a previous video, less than 30 days ago, an investor rate 25% down with points was 6.625, 7.5, 7.75 par. Now with points, we're down to 5.375 on a 25% down and 5.25 on a 30% down 30-year fixed mortgage. Now remember this, if you're an owner occupant, you're below 5, okay? So now what's happened is a lot of people who wanted to buy a house, and they're going, well, yeah, I can buy that lesser priced 3-bedroom, but I really need a 4-bedroom home, but can't make the monthly payment because of the rates. Boom. Rates are down, and all of a sudden they're saying, oh great, I'm going to move right now before prices go up anymore, because the prices pre-COVID to post-COVID are like anywhere from a typical rate of $270,000 nationwide for a median price of a home to $413,000, although in Oklahoma with new construction we can start even below $200,000 because we're one of the most affordable markets in the United States. So what's happening is I've got investors going, okay, I'm ready to buy, but they may be first-time investors. And I keep telling them, I don't like to hard sell, but I'm just saying, look, with these lower rates, inventory is going to be moved very, very quickly. And that is exactly what's happened. I've had 4 homes in the last week that investors were ready to buy, and it took them, I need this, I need a video walking tour. I get it. We do all of those things for you to make sure you're doing the right thing. But they're terrific deals with high cash flow, and the owner occupants are coming in at below 5%, and they're buying those properties because they've been waiting a long time for these rates to go down. And so what's happening is, even with the high interest rates, we may go to anywhere from 32 to 42 days for an absorption rate. 6 months, 4 to 6 months is considered a neutral market between buyer and seller. Still a seller's market. Guess what's happening right now? People are buying out of sequence. They're buying at a time they don't normally buy because they've been waiting. They are excited that they can own their own home, and I don't blame them. It is kind of the American dream for a lot of people. If you're an investor, understand this. You've got a lot of competition right now. Not just other investors, but owner occupants moving very, very quickly. Oklahoma City and Tulsa right now in September is a white hot market. So if you're an investor, you need to move if you've been considering buying with us.